Hello everyone, I'm Tom with Stock Navigator, and today subject I'm going to talk about the swing trading, when to take a profit. Today, if I would like to ask you a question, how many times had a long-term investment gone south due to staying in the trade for too long, or had it happened to you, or perhaps it happened to someone that you know? The chances are yes, because this has happened to many investors and traders out there. We can call this turning a winning trade into a losing one. Let's face it, finding a solid buy and hold stock is like finding a needle in a haystack. No matter how novel or innovative the company is, the price tag seldom escapes the influence of the crowd psychology, which is a significant factor affecting price movement. For example, like Amazon, which was founded in 1994 and went IPO in 1997 for $18 per share. We all know how much one Amazon share is worth today. So can we find another Amazon? The answer is you don't need to, because even if you think you did, you could potentially be stuck in the trade for a long time to find out otherwise. In this, a much higher probability approach is the strategy of multiple high probability trades. This is the same approach followed by the financial institution or the hedge fund, which is why they are consistently effective at building wealth for their clients. Per this strategy, you can set a predetermined sell zone per your trading plan, and don't worry, this does not require you to sit in front of your computer all day, and only require you to manage the trade one per day or week or month, depending on the time frame you are trading. This approach is much more powerful than finding the one or two moonshot trades. So let's watch the trading plan. All successful traders create and follow a trading plan. You need to select a time frame to trade after carefully understand your trading objective. For example, if you are trading in your long-term account like 401k or IRA, you likely to select a bigger time frame than say if you were trading in your short-term brokerage account. The next critical step is to understand the overall market condition well before you even considering open a trade. Take a look at the March 2020 crash, for example. When everything was in down, it was a bad time to open the trade, especially in a long direction. Then when you can find out which sectors and industry are doing well and expected to do so in the near future. For example, right now, like the shortage of something important like semiconductor or lithium for electric car batteries, just to name a few potential. Furthermore, you can identify potential stocks and analyze them for strong fundamentals. Last but not least, you must perform your technical analysis to formulate your trading plan. This is purely based on the crowd psychology, which is an important factor influencing price movements in all the price charts. Through this analysis, you'll be able to identify your buy-sell zone and stop loss. These are the three critical elements that contain your entire trading plan, which must be executed in the predetermined way. Stop loss management is also a critical skill and the basic for proper risk management execution. Poor risk management and risk are number one and number two reason why 90% of the investors and traders fail in the market. So let's take a look at the chart of electric automaker NIO for an example. The chart generally shows you how to spot a trend change, an entry combined with a stop loss that goes with it. As shown in the chart, there can be 2-3 targets in any upward move. The probability of hitting the first target is the highest. Then the probability of hitting a second target becomes lower, but the probability of hitting the third target becomes significantly low, which is why they are the riskiest. Depending on the trader or investor risk appetite, they will select the target that fits their chosen risk profile. Setting up a stop loss correctly is also a critical skill. The initial location for the stop loss is shown. However, as the price is moving up, this needs to be managed appropriately as it will be your safety net. Let's take a look at another symbol. For example, like you look at the chart for Amazon here. In this symbol, we are looking at Amazon monthly chart. And between 1997 and 2000 and 2002 period, right around the dot-com bubble burst, Amazon is one of the major casualties of this event. This case study is the prime example of what can happen to the price chart of any newer company due to the crowd psychology. Regardless of how promising their future may be, the trade entry setup was different than NEO, but clearly visible in the major time frame. Firstly, you can observe the number of major impulsive in the full cycle. Like NEO, the probability of hitting a lower target is highest. The risk increase the longer an investor stays exposed to the trade. Close to the end of the cycle, Amazon shows you two clear opportunities to sell at around $100. If the investor were keen enough to notice this, they came out with the trade with a substantial return versus with the investor that did nothing. So in Amazon case, the swing trader or investor who had followed the trading plan exit the trade close to the top with the return of 4,445% versus someone who did not know how to swing trade or did not follow the trading plan. Even if they make the perfect entry at $2.25, perhaps by luck, their return will drop to only 225% or by 17 times of full return potential for that trade. This shows you how counterproductive the last 1.5 to 2 years were for continued participation in the Amazon trade. So why did this happen? There are 4 key reasons. Number 1, greed. The trader wants to get more from the market. This is one of the top reasons why new traders and investors fail, because they get too greedy with a strong emotion which can make you blind. And second, euphoria. Everyone knows stocks are very volatile instruments and can carry significant gain potential. When price is on the way up, it makes a trader or investor naturally feel very good and start building the castles in the sky. When the price declines, it oftentimes turns out to be a rude awakening for them. Due to euphoria, the awakening can unfortunately occur too late, and that's why you have to be careful. And number 3, complacency. This is typically followed by an euphoric state when price is on the way down, but the trader or investor is partly in denial and decide to do nothing, telling themselves they need to be patient because the price is about to turn around. Their self-confidence is high initial, but it takes a blow with its passing month as they witness their account value reduce until they reach their breaking point, which is when they sell at the bottom. And the last item is the risk management. If the trader did not recognize his or her profit target, but were following risk management by managed stop loss appropriately, would have sold at around $45. Stop loss is your safety net to protect your profit or limit your loss, but most traders do not use it. Poor risk management is the number one reason why 90% of the traders fail in the market. So equip yourself with the knowledge to exit at the top and recognize when to re-enter the trade at the bottom, and we can teach you how to master this powerful skill. So now let's take a look at a couple more examples here. If you look at the chart here, that the Bitcoin, if you know that when the market hit to the 65,000, and the people, they hear a lot of good news outside, okay, and the people, they keep saying that they will go to 500,000. That's why a lot of people keep buying, but they don't know that they are at the end of the move. When they get to the sell zone, and then when they break the support, and people, they already get out, they give them another chance to take profit. But if they don't take profit, they do nothing. And within a couple of weeks here, it's from 65,000, now they go to 30,000, that's still on the way to going down. That's why you see that you have to know how to manage your trade so that you can maximize your profit potential. And let me give you another example. This is another plug power company. As you can see here, this company is also have a big promise from President Joe Biden on the infrastructure plan on renewable energy. So this stock, when they hit to $75 at February, and look at them right now, they go down to $18. So if you keep buy and hold and you don't manage your top lot, and this is it's a big damage. And if you keep doing that, and then you will never make any money. That's why you have to know how to manage your top lot and how to control your profit so that you can maximize the return. So in conclusion, it's a universal truth, right? The price never go up forever. As a trader and investor, they always get trapped in the state of denial. They need to wake up and learn. This is exactly why everyone needs to learn how to swing trade. No exception. Some may make agreement. They have responsible financial advisor at the reputed company. If you think your financial advisor are good swing trader, you may be in for the unpleasant surprise. In my case, I too rely on my financial advisor when I work full-time as an engineer. However, the dot-com bubble crash was a wake-up call for me. Unfortunately, the damage was done. From that moment on, I decided to learn this skill and learn it well. I realized that to correctly learn how to swing trade and formulate a solid trading plan, it is important to obtain a right education. The expert trader course offered by Stock Navigators offer just for that. So take the next step towards your financial freedom and watch the free webinar following the link I have over here. Again, thank you for watching, and please let us know if you have any question so that we can make a next video for you. So now I'm going to make the let me see here. Okay. So now I'm going to do a market update for you. Okay, so as you know that trading is a very risky business. It's not a get rich quick scheme. That's why as Stock Navigator, we will help you to learn and understand how to read the price action on the chart by using modern technical analysis and understand the crowd psychology combined with the pattern recognition and money management so that you can trade with the high probability of winning and a low risk trade. But we understand it's very hard for you to know everything overnight, so we will mentor you every day until you are successful, and we will guide you in our live trading room daily so that you can follow along and you can ask and see how price action in real time. This is the only way that you can manage your own financial future. This is the time for you to invest in your education so you can survive and make money in this volatile market. Now, I'm going to do a weekly market forecast for next week, the week of May 24, 2021. And if you look at the chart here at the SP 500, so you can see that, so the last couple of days on last week, the market is trying to push it back up. Now we are at the try to test the sell zone here. So if we be able next week, we'll be able to punch to this level, the market will continue to go to the upside. But if they give up here, the market still will be choppy in the sideways formation again. And if you look at the Nasdaq is also do the same thing. They put it back up, but when it hit to the sell zone, they fell again. So next week is really important for the Nasdaq to find a way to punch to this level to carry the momentum for the upside. Otherwise, it will be sideways and choppy again. And you look at the Dow, it's also the same thing. They put down and they put it back up, but they still have a lot of resistance on the top. And the Russell 2000 is also choppy here. Okay, in order to go higher, they have to get through this area here in order to move it up. And if you look at the volatility index, so the volatility index, they put it up to this way, but the last 3 days on last week they put it back down, so that helped the market to put it back up. So as long as the VIX is still going down, the market still have a chance to bounce to the upside. And look at the 10-year Treasury note, and it also go up, but they give up at the sell zone. So that's a good sign for the technology try to put it back up. So now the question here is, they come down here and then put it back up, or they continue to go down? That the 10-year Treasury note, it will tell you how inflation in the market will be, and that will define the direction for the technology stock. And if you look at gold it also try to break out the down trend line here. It look bullish. So the momentum, if the market is going down, or the people will be more interested to buy gold to hedging. So the gold will continue to find a way to put it back up right now. And if you look at the crude oil it still hit it back to the sell zone. They fell at the sell zone, they put it back up. Now they have a support here. So if the oil is able to put it back up, that can help the market to move up too. Okay, so now if you look at the Bitcoin is still, after the big drop from 60,000, and then they dropped down to 30,000. They found some support, but they are still have some turbulence, because after the people sell up here, a lot of people getting nervous now, so they will go sideways before they build a base in that area before they can turn around. It's the same thing like in Ethereum. It also they have a big drop here, so now they continue to drop, so they see the area of support. So that's for the Bitcoin. And if you look at the S&P 500 sector right now, the material is still strong one. That's the XLB. It's still hanging there. It's a lot of choppy. The only thing I see right now is the gold, which is GDX, which is still very strong, and gold, that's another one. Okay, so it's still try to push it up, and it's still up and down, but the trend is still up. And the financial sector is still doing well. As you can see here, they are go sideways choppy, but the overall trend is still bullish, with a lot of money flowing to the market right now from the stimulus packet there. So in financial sector, I see some strong stock like Goldman Sachs, right? They're still doing well, and JP Morgan also doing well, and some bank still doing well. Okay, so this one here, SMBK, the Smart Financial, is still doing well. And if you look at the energy sector right now, I think that they are still going sideways. And one sector that I think is still doing pretty good, which is the real estate and REIT. Okay, so a lot of related to urban business. So those stocks, they will provide you a yield, and as well as the trend in the uptrend. So a couple of stocks in this sector is let me see, XP. Okay, so this one here, after they hit multiple resistance, now they find a way to pull it to the upside. And SLG, that's another one that they build away here. If they can break out the high here, they will continue to put it to the upside. And another one is the CCI. This one here is also after they pull back, now they find a way to put it up to the upside again. And cybersecurity stock that I already do one video for you on Thursday, and a lot of stock in that sector is still doing well, like PAWN, Palo Alto Network. Okay, let me see here. Okay, let me find a symbol here for you. Okay, so Palo Alto Network, the symbol PANW. Okay, so this one here, after they build away, they break out and very strong move to the upside. And another company like FireEye, that's another the symbol FEYE. They also stuck in the bay, now be able to break out of the bay and looking forward to move to the upside. And another one is like ETF. Okay, so this is one of the stock that I give you over on Thursday. So this is the ETF. It also try to find a way to put it back up also. And if you are bottom fishing for the technology stock in the sector SLK, okay, so this sector after they file a support, if they can carry the momentum up, so you can looking for some stock and then bottom out, try to find a way back up, like Wayfair, symbol W. So this one I try to find a way, if they can clear this resistance here, they will continue to put it up again. And SYK, that is another one. They go up and then they pull back down. Now they try to find a way up. So the bio sector, the robotic is still doing well. So if this one they put up and down, but the momentum, if the market is still going up, those stocks have potential to put it up also. And another one is the TMO. Okay, that's the Thermo Fisher Scientific. So this one here, they are after they came back down, now they try to go back up. So if next week, if they can give you the green candle and the upside, they have more potential to put it up. Okay, they still have room to move to the upside. So I will continue to update during the middle of the week. So make sure that you are subscribed to my YouTube channel so I can notify you on a new update. If you are busy working and you don't have time to do your research, you can subscribe to our premium watchlist, where I handpick about 5 stocks every week and analyze in detail with entry, stop loss, and targets so that you can follow. You can check it out on show more button link below. I hope that you enjoy my analysis. Please click the thumb up like button below, or any suggestion, please let me know on the comment below. Again, thank you for watching. Good luck in your next week trading. I will see you during the week, and take care everyone.